It sure is a good thing that we have a government right now, an administration who is extremely conservative and fiscally responsible and is shrinking our government budget deficit. And that is why our budget deficit this year for fiscal year 2022 shrank to $1.4 trillion. They're making sure they're keeping the pocketbooks tight. They're making sure that they're not spending extra money where they don't need to spend it so that they can be responsible for the American people. So we have a deficit of only $1.4 trillion. Peanuts. Ready? Let's dive in. Clearly, I was being facetious here because yes, the budget deficit shrank to $1.4 trillion. However, that's shrinking from a staggering 2.7, almost 2.8 trillion for 2021 and a 3.1 trillion for 2020. So to put that into perspective, once this chart gets updated, we'll see the number hit about 1.4 trillion right around here, which is going to match almost exactly the absolute worst year prior to 2020, which was 2009. Putting it in more recent context, look at this deficit tracker from bipartisanpolicy.org. Now, this is not updated for the last few months of fiscal year 2022, but it does put in perspective. Each colored line is a different year. So starting off at the blue line, we're seeing 2019 down here. And then when COVID hit, 2020, lockdowns, stimmy checks, and corporate bailouts and bank bailouts and all of that, green line all the way at the top. 2021, yellow line was a little bit better. And so the red line here for 2022 shows, hey, we're getting back down to a little bit normal levels. But one thing I'd like to point out here, looking at the federal surplus or deficit ever since really the 70s, when we've had pretty much a constant deficit, what we see here is this pattern where the deficit gets deep and then it climbs back up and then it gets even deeper. Then it climbs back up, then it gets even deeper, and then climbs back up, and then it gets even deeper, and then is now climbing back up. What will the deficit hit next time when it goes deeper? We already hit 3 trillion, whereas before, the last worst deficit was 1.5 trillion. That means that following on the same pattern, will it be 6 trillion? Will it be 10 trillion? Who knows? Could the dollar even survive that? I guess we'll see. But the Washington Examiner here points out a good point that soaring interest rates could mean a debt reckoning could be coming years sooner than originally thought. So is that actually a problem now that the Fed is not monetizing the government's debt as of right now? Because if we look before, every time the balance sheet for the Federal Reserve spikes, that means the Federal Reserve is printing money and giving that money to the federal government, and the federal government then owes those dollars back to the Federal Reserve when that debt matures. But despite the fact that the Federal Reserve is a quasi-private entity, it is also a quasi-public entity. And what that means is that any profits that the Fed makes are swept back to the Treasury. And so after the Federal Reserve pays for all of its expenses, when it has cash left over from the profits on the assets on its balance sheet, that money goes straight back to the Treasury. So when the federal government pays interest on the debt owed to the Federal Reserve and there's extra left over, it just goes back to the federal government. So any debt that the Federal Reserve owns, that money from the federal government owes to the Federal Reserve, just comes right back. It's basically interest free. It's like you owing money from one of your bank accounts to another one of your bank accounts. It's still your money. It comes right back to you, maybe with a little processing fee along the way. But as you can see right now, since the end of 2021, the Federal Reserve has not been buying government debt, which means they have not been loaning new cash to the federal government. However, as you can see here, the public debt has still been increasing. We can see that the total national debt number is going up, and that's because we still have a deficit. So the federal government gets money from taxes, and then they spend way more, and the difference they have to borrow. The question is, who are they borrowing from? If they're borrowing from the Fed, it's basically free debt. But when the Fed is not loaning money to the government, as is the case right now, they have to borrow from somebody that they have to actually repay and that owe that interest, and it doesn't come back to them. The total amount of dollars owed as interest on the entire national debt in 2022 was $305 billion. That's about 5% of everything the United States government has to spend. But you can see how quickly this can get out of hand, as just the projections of where interest rates will be on the average national debt will get to the point where in just 10 years, the interest could be at $914 billion, which is over 11% of the total national budget. And that's assuming interest rates don't go up more than expected in between now and then, which might not be a very safe assumption considering the amount of debt that the government has compared to the size of the American economy. If we look at the total public debt compared to GDP, we're still sitting above 120%. That means if you could theoretically sell the entire economy and give that money to the US government and they paid off debt, they'd still have 20% more to go. This would be like if you had assets like a brokerage account worth $100,000, but you had debt worth $120,000. You could sell all your assets, pay off debt, and you'd still owe $20,000 left over. Not a good position to be in. And if you were in that position, people who were considering lending you money might not do it at the same low interest rates that they've been doing for decades. They might look at you as a credit risk and say, hey, well, it's going to be harder and harder for you to get more and more money in taxes to continue paying back this debt, which means that if I'm going to loan to you, I'm going to demand a higher interest rate to compensate myself for the risk that you might default. And you might say, well, they can always borrow more in order to pay off that old debt. But yes, they're borrowing more at higher interest rates, which means when we go back to this chart, the total amount they owe on interest for the debt goes up even faster, which means they're like a snake eating themselves by the tail at that point. Now, to understand a little bit more in context how much of a big deal this could get to in the next couple of years, we need to look at how much the interest cost is compared to other spending programs. If we look at this chart from the Committee for Responsible Federal Budget, crfb.org, we can see that the net interest portion of what the government has to pay on the interest for its debt vastly exceeds what it pays for veterans programs, food and nutrition services, transportation, education, housing. Now you might think, well, that's just because those categories are pretty small. Those categories should be bigger anyway. Well, not so fast. If we break it down by how much individuals have to pay, we can see that an individual every year on average might spend $650 on personal care, $1,200 on education, $1,400 on clothing, $1,500 on gasoline, although with recent gas prices, that number is probably a lot more now. And the average American is sending over $3,000 to the United States government in taxes that is just going to pay the interest on the national debt. Now, for most Americans, if you had an extra $3,000 a year freed up, that's almost $300 a month, that would be a huge boost. You could use that to save some more. You could use that to buy some more healthy food. You could use that to get some better education, to be able to get a promotion or a better job. $3,000 a year is a huge chunk for the average American that could vastly and drastically improve their lives, not to mention the spillover effects of spending that extra money on businesses, on productive things that people want to spend that on, would then mean more profits and revenue for the businesses that would then be able to have more income to spend on research and development and pay raises and all that. It would be a massive burden lifted off of the American economy. But instead of going that direction, what we can see in front of us is really only one direction, which is that portion has to go up because interest rates are going up and the federal government has to roll over their debt because they're still spending way more than they're bringing in. Even though the $1.4 trillion deficit for 2022 was way better than the deficit for 2021, which was better than the deficit for 2020, still $1.4 trillion deficit means they're adding to the national debt still pretty quickly. And not because they're trying not to, it's because they're trying to spend and because of political gridlock, they can't. So with them taking out more debt and with interest rates on the entire debt load continuing to go up as they roll over old debt, that means that the amount of money that people are going to have to continue to give to the government just to pay the interest on the debt will go up and up and up and be a net burden on society. That's not going to a social safety net. That's not going to affordable housing or healthcare or education or anything that most people think, or maybe half the people think, would be good for the country. It's not going to any of that. It's just a net drain, a drag, a burden on the economy. And that number is going nowhere but up. Now, finally, I would like to let you know that I just released my brand new bear market investing guide. This is a fantastic course that takes you through identifying a bear market, identifying the best world-class assets, and then figuring out what price to buy those assets at. Normally, this is $300. I've got it for only $99 right now, linked in the description below. I highly recommend you check it out. You can't afford to miss out on buying assets that are world-class assets at world-class prices, and you have to learn how to be able to determine what the best prices are. Link in description below. As always, I really appreciate you guys. Thank you so much for watching. Have a great day.